What's going on, family? What is up, guys? What is up? What is up? What is up? Welcome to today's stream with your boy Abel. Super excited to be here with every single one of y'all tonight. You guys know the vibes. We are here, guys. We are live. We are live because we have a very interesting release that we're all going to go ahead and take advantage of and see what we can ultimately really come up with. Just give me 1 second. Let me see why this camera is not coming on. What's been good with my camera lately, man? Let's see. Let me see what is the problem. Let me know if you guys can hear me, family. Drop some threes in the chat if you guys can hear me. Right, drop some threes in the chat if you guys can hear me loud and clear as I try to figure out the situation with the cámara. Con la cámara. Let's see what we got here. Yeah, why is my camera acting bougie? Why is my camera acting bougie? Oh, see, now it's coming up over here, but I don't want it over here. I don't know why my camera be acting bougie, family, but give me 1 second. Let me see if I can get this situated because I need my camera working over here, not over here. Let me go ahead and get rid of you for now. Let me come back over here. And give me 1 second. We do have about 15 minutes until this actual release comes out. I definitely want to talk to you guys. There we go. All right. We are much better, at least as of right now and for now. And yeah, we're just going to have to do what it do. But family, what's going on, guys? Welcome to today's chat or today's session. Super excited to be here with every single one of y'all. I appreciate every single one of y'all that was on last night's stream and also decided to come on this stream as well, because we do have a lot to talk about today, right? Obviously, the big important thing that we are all here for today is literally going down in about 14 minutes with the FOMC economic projections, as well with the FOMC statement and the federal funds rate or the Fed interest rate decision. Because this is really going to be an overall factor, guys, that really creates long-term directional bias in these markets. Now, obviously, the big reason why we're expecting right now an increase in rates is because inflation has just been out of this world. And right now, the Fed and pretty much almost every central bank across the world, guys, is pretty much trying to figure out ways to combat inflation. And they have a few tools that they have access to that actually allows them to do that. One being, raising interest rates, right? The point of raising interest rates is to make the cost of borrowing and the cost of a lot of other things more expensive, which in return will cause more people to actually hoard more money, sit on more cash, instead of actually freely spending it. Now, before we even get into that, guys, we actually did have retail sales that came out earlier today as well. And retail sales came out, obviously, it missed by projections. They were forecasted to actually come out. Core retail sales was forecasted to come out at 0.8%. Retail sales 0.2%, and neither of those actually came out as predicted. They actually came out far worse, far less, which means that there was less spending that was occurring across the board over here in the US, which could actually be looked at as a good thing, right? This is actually a very interesting thing to really consider right now, right? Because typically when we talk about retail sales, right, for a strong economy, right, you really want to see retail sales occurring across the board, right? You typically want to see these type of projections, either come out as forecasted or even come out higher, right? Because strong sales numbers means typically the economy is going to get a boost from that. But this is the biggest factor, right? And the biggest caveat now is that because inflation is going through the roof, because inflation is absolutely out of control at this point, now we don't want to see retail sales continue to go up. Right, because if we see retail sales continue to increase, then that pretty much is an insight that maybe inflation will continue to increase as well, because people are still spending, even with the cost of goods being as high as they absolutely are. We're talking about inflation being at 8.6%, which is literally higher than what it was last year around the same exact time. So these are things, guys, that we have to be aware of, and these are all things that we also have to be able to know how to trade, because as a Forex trader, yeah, I get it. Everybody really focuses on technical analysis, guys, but technical analysis is literally the last part of the whole equation, right? You really need to understand from a fundamental standpoint what's going on in the world, and then from a sentimental standpoint how investors and traders and big institutions, how they're actually interpreting the data that's actually coming out because that's what's going to create long-term direction. Everything else is what comes afterwards, right? So retail sales coming out lower than expected, in my opinion, is actually something that could be looked at as good right now, because that means that people are starting to spend less, which in return, less spending can definitely help fight inflation. Okay, so that's something that we've seen actually come out earlier today. Very interesting data. I was actually expecting this just because, again, they did start raising rates a month, 2 months ago. And that's normally what happens, right? When interest rates go up, less spending usually occurs across the board. So obviously this number really wasn't something that I was surprised about ultimately, right? Now, with today though, this is the big one. 10 minutes, guys. We do have FOMC economic projections, which is really going to be probably the most important thing in the statement to really see what the market or what is actually being said. But really seeing what the interest rate decision actually comes out as well is going to be extremely important. Now, this is just, I'm putting this out there before the actual release comes out, right? I was actually having conversations, guys, with a few people earlier today, pretty much just getting our biases and our insight on what we really think can actually happen. Because inflation is absolutely going rampant, right, and it's absolutely out of control. Right now, the prediction is 50 basis points, right? So we're going to go from 1% interest rates to 1.5% interest rates. But I would not be surprised, right? I would not be surprised. Two things. I won't be surprised if it stays at 1.5. We know for a fact that it's coming out at least 1.5. But because inflation came out higher than expected during the last reading, I also will not be surprised if the Fed actually grew a set of balls and they actually went 75 basis points instead of the regular 50 that we already know is going to happen. But the question is the Federal Reserve going to admit that they were wrong about inflation? Because if you guys really been paying attention to it, which I'm not sure how many of you guys have been, but near the end of last year, they weren't even really caring about this inflation, right? They were saying that it was transitory. They're saying it's going to go and it's only going to happen for a period of time, that it should be gone in a couple months. Clearly that is not true, right? So the Fed actually raising rates, not just 50 basis points, but 75 basis points might actually bring some type of optimism in the markets, which is kind of crazy, right? I still believe that if interest rates go to 1.75, the indice market is absolutely going to crash. Stock market is going to crash, right? I also think if they do go 1.75, that is really going to be the tipping point that really sends us into a recession. But I also believe, and this might be kind of contradictory, right? But I also believe that if they do go 1.75, that might bring some type of confidence back in, because right now consumer confidence is extremely low, right? Because the Federal Reserve has completely dropped the ball for the past few months. And consumer confidence is absolutely on the floor right now, right? So there's no confidence in the Federal Reserve to make the right decision right now when it comes to interest rates and when it comes to fighting inflation. So if they were to be more aggressive and they were to shock the markets with such a higher rise in interest rates out of the quote-unquote the blue, then that at least might give us some confidence, right? Then we might actually be like, okay, maybe they're actually trying to now finally realize that they were wrong and finally go ahead and really help to try to get this thing under pack, guys. But there's definitely a lot of different factors that can come out for this. It's going to be very, very interesting to see exactly how the market does come out, guys. But go ahead and drop your locations in the chat. Drop those locations in the Chizzy chat family. Let me know who's in the chat with me today. We do have about 7 minutes left for the actual release. And then once the release comes out, guys, we're going to go ahead and see how the market is overall going to be reacting to the release. Obviously, we're going to take a look at the dollar as a whole. We're going to take a look at a lot of these indices as well to see what they're doing. And ultimately, I'm personally not going to be trading it, right? Because I don't like trading high impact news like this. If I'm ever going to be in a position during high impact news, it's usually a position that I'm already way in, right? That I got in, days before in anticipation of this release. So I'm probably not going to be trading this release at all. Just throwing that out there. But what we can do is collect the data that is given from this release and prepare ourselves maybe for later on today, maybe later on London session, New York session tomorrow morning. And then from there, we at least have some type of an insight of what we should continue doing. For everybody that's been on my streams, you guys know that we've been calling dollar bullishness for a while. We've been saying that the asset markets were going to continue to crash. because obviously everything that we've been seeing. So we've been pretty much on the ball. I mean, literally almost to the T. So now this is going to be just the next data that comes out that we're going to have to analyze, and then we're going to have to make a decision on exactly what is going on as well, guys. But let me see who else is in the chat room with me today, right? Go ahead and drop those locations. Let me see who we got in the chat, right? Let me see who we got in the chat today. Shout out to all my Noti Gang members. I see y'all. I appreciate y'all. Every single one of y'all that has notifications turned on. I love y'all with the bottom of my heart because you guys help, these streams absolutely go out to more people. One thing about me, guys, is that I do aspire to be, one of the most influential Forex channels here on YouTube, simply because I'm actually giving you guys real raw value, right? It's not just that only technical analysis BS that a lot of these other channels do, because that's all they know. And the reality is, guys, if you're trying to become trading, if you're trying to be a profitable trader by only relying on technical analysis, you're literally putting yourself at a disadvantage. Because a big reason why trading Forex is very, very hard is because there's so many different factors out there that cause price to move, right? There's so much data out there that causes price to change momentum, shift momentum at any given moment. So if you really want to become a profitable trader, then you have to start understanding, guys, what is going on from a fundamental standpoint. You have to start understanding exactly how to correlate, sentiment and correlate that with technicals. And then once you're able to do that, then you'll be able to go ahead and really, really see a lot more confidence in the markets, guys. So for those of you guys that are new to the chat, new to the stream, that have never actually seen me speak or seen me teach before, I want to welcome you guys. I appreciate y'all for actually tuning in. Hopefully you guys get enough value that it causes you to want to subscribe to the familia. Again, I'm not going to force your subscription. I'm not going to force your like. I want to earn that stuff, right? I want to earn your subscription. I want to earn your like. I want to earn the value. I want to earn your engagement. And I'm pretty confident that I could do that, okay? Because I've been trading for 7.5 years now. 7.5 years. And I feel like I'm in my trading prime right now, right? Like I feel like right now I'm in my trading prime, just based off all the information that I have and my ability to analyze the markets. And yeah, right, it's gonna be pretty interesting, guys. So again, we do have about 4 minutes for the release. Let me see who we got in the building today. I see we got Alabama in the house. We got sunny old England. We got Nigeria, Colombo, Sri Lanka. We got Texas, Houston, Colorado, Tawas City, Michigan in the building. New York, what is up? We got Fifth Ward, Texas. I see y'all. Dominican Republic, what is up? What is up, Nene? How are you doing? Good to see you in the chats, my brother. We got Trinidad in the building. Gainesville, Georgia. India checking in. LA, Virginia, Oklahoma City. We got Suriname in the building. Jackson, Mississippi. What's up, Jarrell? Good to see you, my brother. We got Reed in England, South Florida, Dallas, Texas, Malaysia. Kendrick from Charlotte, South Carolina. Been following you since IML days. What's going on, K Money? I see you. All right, we got Jersey in the building. Shout out to all my Noti Gang members out there in Jersey. I see you, Linda. Let's see who else. We got Suriname in the building. Got my trading foundation from you 3 years ago. I appreciate that filthy beard. Right, I'm glad that you were able to get some value from me. Right, 1:55 a.m. right now. Shout out to you, Jen. Right, I appreciate you tuning in, especially at 1:55 in the morning. Right, let's see what else we got here. Let's see. Right, Wisconsin in the house. Charlotte in the building. Miami, what's up? Kenya, VA. I see you guys. What is up? We got the boot in the building. Johannesburg, South Africa. What is going on? Oklahoma City, New York City as well. Appreciate every single one of y'all for tuning in today, guys. So again, we're going to really be analyzing these markets. I'm going to be more so taking a look at seeing what S&P 500 does. And we're also going to take a look at to see what obviously the dollar index is going to be doing as well, to see if there's any type of perspective or any type of again, I'm not really going to be trading too much, but I just really want to see how the market reacts to this. Because for me, I'm still expecting, guys, very simple, right? I'm still expecting long-term bearishness for a lot of these indices, right? I truly believe that this decline in the stock market, this decline in assets is pretty much just the beginning. Like, we haven't even really got into the craziness yet, right? Like, I think this is literally just the start to a lot more downside for a lot of the asset markets, the equity markets overall. So I'm still going to be expecting long-term bearishness for a lot of these plays. Now, the question is, depending on how the federal funds rate comes out, are we going to see an initial spike higher before we go lower, or are we just initially going to see this thing completely sell off? All right, very interesting times to be alive for sure. And with that being said, guys, if I do expect the actual asset market to drop, then I do expect Euro USD or not Euro USD, but I expect the dollar itself to possibly fly. Again, the question is, are we just going to fly right now from these levels, or are we going to see a short-term pullback before we absolutely go ahead and see the market skyrocket, guys? So that's pretty much where we're at right now. Very interesting times to see exactly what the market is going to do. Right, we're going to go to lower time frames, 1 hour time frame for the dollar and 1 hour time frame for the S&P as well, to really see the reactions. And it's going to happen, guys, in about 30 seconds, right? We have about 30 seconds left before we get this actual data to get released. So let me go ahead and just bring this over here. All right, I'm going to bring this on my other screen just so that I could see it right away to see what we actually got here, right? See what the news actually comes out as. And then once we get the data, guys, we'll be able to really come up with a blueprint on how we could approach these markets going into, to pretty much end this week overall, right? So we're 5 seconds away. Let's see what we got. Let's see what we got. Let's see if we can get this to actually refresh as soon as possible. Let's see. Refresh. Let's see what we got. All right. Let's see. Let's check out gold too. Let's keep our eye on gold as well. Right? Let's keep our eye on gold as well, because gold could be very, very interesting. Right? I believe gold is probably going to fly off of this data. Gold could potentially fly from this data, but let's see. Right? So we're seeing an initial reaction, guys, higher for the S&P 500 right now. Oh, so we did come out at 1.75. Wow. Guys, look at this. They actually did come out and did 75 basis points. Oh my goodness. Right? They actually did decide to go against what was already being priced in, and they went and did a full 0.75. This is very, very interesting, to say the least, because now, based off this type of data, right, we have to know how to pretty much play this, guys. Overall, I think that this is going to really send these indice markets collapsing. Right, I believe this is really going to start to go to the downside, right? Because interest rates going up is only going to spook the markets, especially going 75 basis points. Like, that's a shock in the markets, guys. So don't be surprised if this does start to tank to the downside, right? Look at the initial reaction that we're getting right here. Look at this initial spike, and now we're starting to see this thing absolutely tank. Look at this, right? I'm expecting a lot of downside based off that release, right? Because higher interest rates is going to pretty much cause a lot of people, it's going to make it harder for people to actually get access to capital, right? It's also going to go ahead and spook the markets, right? Which is what I believe is going to happen. So overall, I think we're really going to see, guys, a lot more downside. The crazy thing is about this, though, right? And let's actually take a look at gold as well, right? We're not seeing no really crazy reaction from gold. The dollar is pretty much just whiplashing on all aspects overall. But I truly believe, guys, that this is going to be more bearish than anything, right? Even if the market, for some reason, again, the market's going to do what it wants to do, right? We did see a massive, massive sell-off, right, for a lot of these indices right before this data. So even if, I don't think it's going to happen, but even if it does happen, I want to see this thing absolutely go ahead and sell off regardless, right? Especially off of that type of data. Now, there's going to be two ways that we can really look at this type of release, right? Where they did increase it 75 basis points. Now, that can either spook the markets because it was such an aggressive jump in rates, right? I mean, again, they literally raised rates, guys, 0.75%, which hasn't happened in 20, 30, 40 years. So my initial thoughts is going to possibly spook the markets, but this can also bring some type of confidence to the markets as well, right? We have to look at things from different perspectives, guys, right? Because 75 basis points was, again, not expected. Think about at the beginning of this year. Beginning of this year, the plan to fight inflation was to raise rates about 2 to 3 times and only doing it 25 basis points each time. But because inflation was going so crazy, they're like, man, no, we got to raise rates probably 6 times. And now they're saying, man, no, we got to raise rates 50 basis points for the next at least 3 months. Now they went and said, nah, we're going to go ahead and go more aggressive and raise it 75 basis point, which is what we just seen. So overall, I definitely see a lot more downside for the S&P. I see more downside for NAS 100. I see more downside for US 30. I see, if we're looking even at currency pairs that probably most people are going to be trading, I see more downside for US 30. I mean, for Euro USD. I see more downside for AUD USD. I see more downside for GBP USD. Right, I'm giving you guys exactly what my outlook is going to be going into the rest of the week and how I'm going to be positioning myself, right? Now, as for USD JPY, I believe this is going to start to fly, right? UJ should really see an increase. I mean, we're seeing it right now already, right? We're seeing, look at this. Look at UJ. UJ should absolutely go to the moon based off of this data. Any currency pair, and this is just a very simple in terms of currency pairs, guys, right? I'm definitely expecting bullish dollar all day, which we've been calling out pretty much for a while now, right? I'm expecting bullish dollar all day, which means currency pairs that begin in USD, right, should fly, right? It should fly. Currency pairs that end in USD, they should go to hell, right? They should tank. They should drop overall for the rest of this week, even going into next week. You got to understand, guys, right? This type of release right here and this type of a move, this is what I like to call a catalytic move in the markets. This is the type of move, guys, that if you're able to get an entry, you can really ride out for a long period of time. Like if you get an entry on any of these currency pairs, you can go ahead and position yourself for a long-term position trade where you don't have to be fearful about getting in and out. You could just ride it out, especially if you get an entry. Now, let's see what gold is doing, right? Gold is giving an initial reaction to the downside. Now, if we really want to analyze gold, gold has been very interesting as well, right? Because overall, what has been the strongest asset across the board, right? The strongest currency, the strongest play, the strongest asset across the board. And what has been that for the past, I would say, few months, guys? Answer this in the chat, right? Answer this in the chat, right? What has been the most dominant either currency or asset that we have been seeing overall pretty much across the board? All right, who knows, right? It's pretty much what we've been calling forever now, right? Let me know in the chats, guys, right? Because this is massive, right? But the number one thing that's been absolutely dominating these markets is the US dollar, right? The dollar, yes, Cedric, right? The dollar has been absolutely on fire. The dollar has been dominating these markets, guys, where it's even dominating against another quote-unquote safe haven like gold, right? So even though technically gold should have benefited for releases like this against the dollar, it just doesn't have a chance. This just shows how dominant the dollar is right now, even against assets like gold. So overall, I would love to see gold rebound. Typically, that's what we see, right? Especially when we're now talking about sentiment, right? Because I talk about sentiment a lot, right? When we talk about sentiment, guys, we're usually talking about the difference between risk on and risk off sentiment, right? This type of release, what is this type of release going to do in terms of sentiment, family? Let me know in the chats, right? Especially for everybody that's been tuning into my live sessions, right? I am live every Tuesday, Wednesday, Thursday, guys, at 10 p.m. Eastern, trading Asian session. We just had a phenomenal session last night. In fact, if you guys did not watch that stream from last night, like, go watch that thing, man, because we literally talked about this exact same thing that happened. I told you guys about the possibility of a 0.75 raise in rates, and it actually happened, right? It actually happened because it's to a point now, guys, where the Federal Reserve, like, they had to do something drastic like this because doing 50 basis points was not enough to bring back confidence in the markets. That just wasn't. So they had to be a lot more aggressive. And that's why we're seeing these things, right? But overall, guys, this is definitely risk off, right? Shout out to you, Cedric. You're on top of the game, Cedric, right? This is going to be more risk off environment. And this is important to understand, guys, because during a risk off environment, what assets actually benefit? The US dollar, gold typically, right? During risk off, US bonds typically also, people start to convert their assets into more so. If they don't want to just actually hold cash, they will also go ahead and start holding U.S. bonds because of the certificate that they get from that. They get guaranteed pretty much payoff from that, right? So during risk-off environments, these are the things that typically benefit. It's just gold is going to be a little bit harder because it's going against daddy dollar, right? Daddy dollar. That's been what's really in control, and that's what I believe overall is going to continue to really, dominate these markets is going to be the dollar. Now, I'm actually very interested in seeing how gold is holding up against, say, the euro, right? Let's see how gold is holding up, because I think gold, again, there are certain brokers that actually allow you to trade gold, not just against the dollar, but even against other currencies as well. See, now, if we're talking about risk off, then yeah, gold should definitely fly against the euro, right? Gold should definitely fly against other currencies itself. It's just against the dollar as a whole, that's going to be a little bit tougher, because again, the dollar is just so strong, because that's what most people want to accumulate and hold, because it is going to, in their opinion, it's going to be that safe haven that is going to be able to really hold its value against inflation, right? The dollar right now is being utilized as a hedge against inflation, okay? So these are things, guys, that we have to be aware of. All right, let's see, but cash is trash. Yeah, cash. This is the thing. Cash is trash unless what? Answer this in the chat, family. Right, and I appreciate every single one of you guys that are participating as well, that are actually being engaging in the chats, right? Because that really just helps me actually go ahead and continue to really provide you guys with this value as well. I love engagement, right? I love seeing people communicate back and forth, right? I love the questions. I love the comments. I love the concerns, right? I even love when people, give different biases than what I'm giving, right? I'm not perfect whatsoever. I'm far from perfect, right? But it's definitely something that, that I like having conversations, right? There's power in conversations, so I really encourage it. But yeah, guys, right? Cash is trash unless there is a market crash. I'm pretty sure that everybody that's on this stream right now is aware that we're probably now gonna be going through a major, massive crash. A 75 basis point rate hike, which we just seen, in fact, is probably going to be the thing that really now sends us and confirms a recession at the end of this month, right? Because at the end of this month is when the second quarter ends, the third quarter begins, but this is also when GDP numbers come out, because they come out typically every quarter, right? And if this quarter that we're in right now comes out with negative GDP, negative growth for the economy, then that is going to be 2 quarters back to back in a row that we had negative growth, and that is quote unquote textbook definition of a recession. So if that occurs, and if we do get that R word recession to really be solidified or confirmed, that's going to cause more fear, that's going to cause more panic, more chaos, more uncertainty, which is going to ultimately lead to a crash in the markets. And the market is crashing, you do not want to be holding certain assets. You want to go ahead and convert that asset that you have and convert it into cash so that you are liquid. So when the market rebounds, however long it takes, right? Because this correction guys, a recession could last, 6 months, a year, 10 years, right? There's been periods in time, guys, where we've seen recessions last multiple years, right? So we really don't know. It's really going to depend on how the Fed and how the government really reacts to it. But overall, it's best to really go cash heavy so that when we do start to see more optimism in the markets, then we can go ahead and start getting into other assets once again. And the best part is we're getting them at stupid cheap deals, right? So I'm talking about getting stocks at a discount. We're talking about getting cryptos at a discount, guys. We're talking about all these riskier assets, getting them at a discount, because now we have cash that's going to be readily available to be used in the markets when the time is right. Right? I hope this makes sense, right? Bitcoin tanking, right? I need Bitcoin to officially hit this 20,000 so that I can hurry up and get paid. Right? I need Bitcoin to hurry up and just smash 20K so that I can hurry up and go ahead and get paid. Right, that's what I want to see with Bitcoin, right? But again, guys, do not be surprised if you are trading right now, right? If you are trading right now, take everything that I said to you guys. Again, I'm not personally trading, I'm chilling, right? In fact, this week I was actually working on, obviously my live account, but I was also working on a funded account as well, right? That I pretty much already passed both phases in about 8 days, right? And it's all because of this information that I'm giving you guys, right? It's because of all this information that we're talking about. Now, this is also going to be the most important part as well, guys, right? The release is very important. Okay, we cannot doubt the fact that this release is important. But But a big thing that we have to be aware of is going to be the press conference. So if you're a nerd like me, which again, I'm not gonna, I wouldn't consider myself a nerd growing up, right? I don't know who actually does, right? But I'm a nerd now, right? So like myself, I'm actually gonna be watching the press conference, and if I don't watch the entire thing, I'm gonna be going to a lot of YouTube channels that I follow that give us, an insight as to what was said, so that I'm aware of what to do next. Because depending on what Jerome Powell says, is going to create sentiment in the markets. The release itself definitely creates sentiment, but Jerome Powell has a very, very powerful position that he holds, being the chairman of the Federal Reserve. His voice absolutely shakes these markets tremendously. Whatever he says can cause more fear or can bring optimism, and the markets will react to that. The markets will 100% react to that, right? So these are things that we have to be aware of, guys. So again, in 15 minutes, we do have that press conference. I probably won't be live for that, unfortunately, because I do plan on going to the pool with my children. They actually, Ben told me they wanted to go, but I told them, nope, I got to wait. I got to see what this release comes out as, right? So probably in the next 10 minutes or so, we'll probably get off this. Just really wanted to watch it live with you guys, right? So really see just the reaction, give you guys my thoughts. But overall, guys, like I said, I'm expecting the dollar to just continue going higher. I'm expecting gold against the dollar is going to be tough because the dollar is just so strong. But gold against anything else, we should expect it to go higher. I mean, again, look at XAU euro, right? XAU against the dollar, gold against the euro, right? We're already seeing that go up. I'm expecting the euro to possibly continue downside. I'm expecting AUD to potentially go lower. GBP USD to potentially go lower. USD CAD to potentially continue going higher, right? USD JPY to potentially continue going higher. Pound yen. Now let's look at pound yen real quick, right? Because pound yen in itself, I'm bullish pound yen, right? I believe I'm bullish for any currency traded against the actual yen, right? Because while we're going through the process of quantitative tightening, which is pretty much the process of sucking money out of the economy, which again, almost every economy right now is going through this process of quantitative tightening, trying to slow inflation. Japan is doing the opposite, right? Japan is still printing money. Japan is still putting money into the economy, and Japan's interest rates are still negative. So that in itself is going to probably continue to devalue the yen overall across the board. So I'm still long-term bullish for pound yen. It's just a matter of seeing when, right? Because we did actually see a pretty strong decrease right here for the pound itself, but we also did have data that came out, I believe it was at the beginning of this week or last week, that also showed that their GDP numbers actually came out much lower as well, right? So very interesting to see. But overall, guys, I'm still expecting more bullishness to come into play for the pound yen. The level that we're currently at right now is a very interesting level. As you guys can see, look to the left, structure to the left leaves clues. And we do have this area, guys, right here where price has clearly acted as, numerous areas of support and resistance. So is this area right here, is this level right here an area that can potentially hold and ultimately start sending GBP JPY higher? It is possible, right? What I want to see for GJ, in order for me to really get confidence about that, if we can go ahead and close above this 163 level, if we break back above 163, then yeah, I would definitely be expecting a lot more upside, guys, for pound yen. So if we see something like this, like a break of the moving average here, the 50-period moving average here on the 1 hour time frame, a strong break of the moving average, a retest, that can definitely go ahead and lead to a lot more upside here for the pound yen. But overall, I'm still looking for bullishness to come in. It's just a matter of being patient and waiting for the right opportunity to actually go ahead and jump in. We haven't gotten that opportunity at all during this decline that we've seen, right? Because once the market really started to drop, all we started to see was lower highs and lower lows and lower highs in the market. Now we finally got this level of structure right here that has been holding pretty strong. So now we can really start to look for some opportunity to go ahead and get involved if we do get that strong momentum to come in and that break above structure. So a break and close above 163 is a buy trigger for me for the pound yen. That is an opportunity to go ahead and get long if it happens, right? That's when I would really be interested in going ahead and starting buy the pound once again. And that could possibly happen, guys, going into tonight London session, right? That's when I would really be analyzing the markets for the pound, seeing how it reacts to London session and seeing if we can get that entry during London to take that advantage of it. And I'm expecting long-term bullishness, right? I want to see these highs get taken. I want to see these highs get taken. And ultimately, I want to see the higher highs all as well get taken, right? So if we get this entry, target 1, target 2, target 3, and then once we break that, we'll have to go ahead and create new targets as well, guys. But this is pretty much a good I'm really interested in seeing how this one absolutely plays out, though, overall, right? But yeah, I think the market itself is really just going to chill until we actually get Jerome Powell's voice, right? Until we actually see what Jerome Powell is about to do. But overall, guys, like I said, I'm definitely very bullish the US dollar. I believe that the asset markets, like the indice markets, the equity markets overall as a whole, are probably going to continue to decline off of this data. Now it's just a matter of if you want to trade today. Again, I'm not personally going to be trading today. I'm chilling. I'm out of the markets for the rest of the day. I'll come back later on tonight, probably during our Asian session stream that we do at 10 p.m. Eastern. And then I'll look for opportunities over then, right? But overall, now we have some type of a blueprint that we can look forward to, right? We know what the data is now. Like, they shocked the markets, right? Now we just got to wait for the press conference, see how that comes out as. And then from there, we can make a decision on what we truly want to do moving forward based on what Jerome Powell says. All right, so that's going to be interesting. It's the press conference that we really need to be aware of now, guys, to see what the market will ultimately end up doing. But family, I do appreciate you guys. I love y'all for jumping on. I do plan on, again, doing these streams more often with every single one of y'all that actually, you know, are interested in really getting better with fundamentals. I say this every single stream. I'm going to continue saying this, guys. But if you feel like you already are good at trading because you're understanding technical analysis, but yet you're not profitable just yet, it's probably because you're missing the other aspects of trading, right? Remember, trading involves 3 main key things, guys, right? From an analysis standpoint. Technicals, which is what everybody focuses on, that's one part. And out of the whole pie, right? If I had to make a pie on the level of importance when it comes to analysis, right? Let's go ahead and do that. Let's go ahead and create this pie real quick, right? Because this is going to be important. Let's go ahead and create this pie. So let's say we have this pie right here, right? I like the color green. Let's go with green, right? And in this pie, if we had to actually go ahead and break up to show how much of an importance each of these things are, right? This is what I believe will happen, right? Or at least what I'll be looking for, okay? I think that about, I don't even know how to do this pie, but we're going to go ahead and do this, right? I think it will be something like this. This is disgusting looking, but it's all good. You guys are going to get the point. Right, where we have maybe something like this. Right? Where technicals, I'm just going to put T for technicals because it's not going to fit. Right? Technical analysis is probably going to be one of the biggest pieces of the pies. Sentimental analysis is going to be the second biggest piece of the pie. Wait, no, technicals is going to be the smallest piece of the pie. Sentimental is going to be a big piece, and fundamental is also going to be a big piece. Right? So if I were to actually go ahead and tell you guys about how I would measure these in the level of importance when it comes to analysis, I can't even spell analysis, right? This is how I would approach it. Fundamental analysis is important. Sentimental analysis is also extremely important. But technical analysis, which is what 100% of people put 100% of their focus on, is of least importance. I hope this is making sense, guys, right? So when it comes to you guys really getting better at trading, I get it. You have to learn technical analysis. You must know that because you have to know exactly when to get in. You have to know exactly where to place your stops, where to place your targets. All that stuff is technical, right? You have to understand that stuff. You have to understand price action. You have to understand market structure. You have to understand change of momentum, all that stuff, right? That's important. But I promise you, it's not nearly as important as understanding fundamental and sentimental analysis, because fundamental and sentimental analysis is what actually causes long-term directional flow in this market. Okay? So look at this, guys, and really understand what you guys should really start educating yourself on. And that's exactly why I'm here, because I want to be the trader that actually gives you guys this real value that is going to take your trading to a whole nother level. All right, so let's see what else we got here before we get off this. When you do a video on where to buy stocks, right? Yeah, we could possibly look at it. I don't really do too much stocks personally, right? I'm more invested into cryptocurrencies more than stocks, but I'm pretty sure I could figure out some resources for you for sure. Let's see what else we got. Is the boot camp going to be replayable? I'm only able to see 2 out of 5. 100%, Quentin. 1,000%, right? For the boot camp, every single day is recorded, right? And every single day will be actually given to every single one of you guys that did actually secure a spot. You know, we actually had a lot of people that actually secured their spot, which is absolutely amazing, which is why, you know, the end of this week is going to be the last week to actually secure a spot. But yeah, every single video is going to be recorded, and it will be distributed to every single one of you guys that actually did secure a spot. 100%. I got you guys. 1,000% I got you guys. Right? Let's see. Hey, can we take a look at Nutsack? Shout out to that boy Keith, Mr. Ghost Games in the building. Right? Man got the Nutsack in the house. Right? This was a inside joke for the longest. Right? Hilarious. Right? Hilarious. Right? But shout out to that boy Keith. I appreciate you both for tuning in. Right, but yeah, guys, this is where we're at with this. Right, understand this, and it will change the game for you. Understand fundamentals and sentiment, and it will change the game for you. Let's see what else we got here. Some pages you watch and any recommendations. That's a good question, right? So when it comes to at least from a fundamental standpoint, because there's a lot of traders out there that do technical analysis all the time, right? From a fundamental standpoint, I really like, Meet Kevin is actually a really good channel. I'm pretty sure some of you guys are aware of Meet Kevin. He has like 1 million+ followers, super knowledgeable individual. But Meet Kevin is one of my go-tos just because, again, he really breaks down all this. I'm pretty sure he's live right now as we speak, probably also breaking this stuff down, right? So let's go ahead and say, hey, that's me right there. Right, look at him. He's live right now. This story begins. Right, he's live right now. So, again, this right here, this one channel, guys, would really do a lot of wonders for you. Right, because he's actually the one to read all the actual releases and breaks it all down, right? So this is one channel I recommend if you guys want to get a better understanding of news and of data. That is one, right? Another one is going to be this one right here, Her Safe Financial, right? Another informative YouTube channel that also really just breaks down a lot of topics, not just obviously here with he does a lot of stuff for the economy. He really doesn't do nothing with Forex. It's not a Forex channel. It's more of a economical channel, right? Which is the stuff that we need to learn. So this one as well, Here Say Financial, is another really good one that really just gives me insight on what we could really look into the markets for sure, right? But those two are probably going to be the go-tos that I would just recommend. I do have a lot more, but I'm going to give those to everybody that are in the boot camp when we actually go ahead and do that. Let's see. One last question. Are we covering technical part during the boot camp? 100%, right? Technical analysis is going to be day 3. We definitely got to talk about technicals, right? That's, again, it is important. I don't want to try to downplay the importance of technical analysis because it's needed, but I just really want to upplay the importance of the other aspects as well, right? But technical analysis is 100% going to be a part of it, right? That's day number 3. Let's see what else we got here. Let's see. I'm still with I am, and nobody teaches this part of trading. It's all technical and strategy dependent. It happens, Oscar. It really does, and I want to be the change maker. I want to be the difference, at least here in the YouTube community. How do we secure a spot, right? So all you got to do is at the end of this video, go to the description. If you want to have access to the actual boot camp, where we're going to go in depth on from a fundamental and sentimental standpoint, on top of technical, and then on top of mindset and habit creation, all these important things that it really takes to become a profitable trader, go to the description. Make sure to fill out the form. It's going to be the first thing that you see. There's a form that you're going to see that you have to fill out. And then from there, send an email to the email that's down there as well. And then I'll give you all the information on how to lock in your spot. Let's see. Thank you. I've been missing this info for a minute. Been in the back of my mind for a while to learn fundamentals. This is where it's at, Quentin. I promise you. I promise you guys, right? I say this with confidence. If you are good at technical analysis, the missing piece that you're missing right now to get you actually profitable is an understanding of fundamental analysis and sentimental analysis. That is the key here. Once you understand that and you correlate that with technicals, your trading is going to improve tenfold. I guarantee it. And this is why I'm so confident about this boot camp, guys, right? Because I'm so confident that I'll give you guys literally a money back guarantee type of deal, where if you do not get massive value, then I will literally give you your money back. Right, because I really want to provide the value to people that are actually serious about it. But I also know the ones that actually apply this value, they're going to get massive increase in their trading. It's going to absolutely go through the roof. Right? No, like, it's going to happen. I know for a fact it's going to happen, which is why I'm so excited about this damn boot camp, because we're about to change the game with this one. Like, I know that there's a very low percentage win rate when it comes to trading Forex, but it's usually because most people are trading with only one aspect of analysis, right? Again, I don't want to throw no guarantees out there, but I'm pretty positive that out of the, I'm not going to say how many people actually subscribe that actually secured their spot. But out of the amount of people that actually subscribed, I feel like 75% of them are actually going to really start to see some type of profitability. Right now, obviously, you're still going to have to control your emotions, learn mindset control and all that good stuff, the habits, develop the habits. But I feel like at least 75% of the people that attend the boot camp are actually going to really, really become profitable traders in the long run. Like, no doubt in my mind about that at all, right? Like, at all whatsoever, right? So that's pretty much where we're at, guys. But overall, like I said, we're really just waiting now to see what Powell's about to say. It is about to go live in about half hour. I'm actually going to listen to it, but I'm going to be doing it by the pool. Like I said, I got to go ahead and bring my kids to the pool. It's super hot over here in North Carolina. So, family, I appreciate you guys for jumping on. I love y'all. Without y'all, I wouldn't be able to really be where we're at here with this channel. I look forward to really helping. I look forward to really providing you guys with enough value that encourages you guys to help me continue to grow, right? So if you guys want to help me grow, I don't need no money, right? Just go ahead and share this stream, share my channel, send it in all your telegrams, send it in every single community that you have access to, and let people know the type of value that we get here, which is the real deal. And that will definitely help me out tremendously. Because like I said, I'm going for the #1 spot, guys, when it comes to Forex here. I know there's a lot of phenomenal channels out there, but I'm going for that #1 spot. And it's going to be based off the value that's being provided and the amount of lives that are actually impacted by the value. So, family, I appreciate you guys. I love you guys. Like I said, I got to go ahead and get up out of here. I got to go take a dip in the pool with my family and enjoy the rest of today. And I'll see you guys later on tonight, guys, during the Asian session as well. I love you guys. I appreciate y'all, family. And I'll see you guys later. Let's get it.